Hey, send that out into the Discord. Pop this over here. And let me get this over here. I think we live. I think we live. Hey, what's going on, everybody? Hope everyone is well. I am going to go through a few things that we are doing to rework how we're going to work 2022, because 2022 is going to suck ass. Hold on, my mic is acting stupid. One second. Check. I was hoping this would be fixed. Hold on. Check. 1, 2. Check. I think we got it. Check. It'll be all right. All right, so what I'm going to do is I'm going to go through kind of some of the things that we're seeing. The problem that the economy has is multifaceted, but let's go through the news first so that we can get that going. There we go. So what we're doing is I'm looking at the weakness. I'm looking at weakness in the markets. Which market at this point doesn't matter, because we got the stock market as well as the crypto market that we have to keep an eye on, at least till the rest of this season, this year, right? So we see a dipping beginning to happen in the miners hash rate. So that could be end of year, that could be turning off of servers or Bitcoin miners in Iran because of power. A lot of power consumption is happening with the crypto markets in the wintertime. And if it's between potentially your electricity going down and the power grids going down and mining crypto, they're telling their miners to turn it off. I think Iran is one of the ones that have said to turn off their miners. So when you see the mining hash rate go down, that to me begins a signal, right? Because people are going to turn it off. Also, profitability becomes a play, right? Profitability becomes a play. So we're in a little bit of a fear zone. Let's see. We do have Bitcoin futures getting ready to expire this week. But I know what everybody wants to see first and foremost, and that is this. The dip I told y'all was coming. We are here. I said that this week would be a significant dip. That dip hit. It's hit now. So if we break this down to the day, you can see my arrow is for this week. And then we've begun the significant dip down. Like, that's just the way it's going to be, right? Like, we know it's now hit And as I said, these are significant dips. Now, remember, I told you there's a January dip, so I have to still map out. I haven't done that yet, but I have to map out next year. So, part of my work this week will be to do what I did for this year and track these significant dips. So, starting January, so we can already see right here, January, first week of January, it was a significant dip. And we're already heading into the end of the year. And there you go. So I really could just go ahead and do this and just clone that. Oops, Control C. Do this and pop it right here. Drop it like it's hot. And then just change the color to that. So there you go. So we've got another significant dip. This is why I've been warning everybody I can talk to, like people that we work with, clients that we not clients, but um, other businesses that we sometimes consult. We've been telling everyone the same narrative. The same one we're telling you is the same one we tell every business we talk to. Hey, if they say, "Oh, are you getting deeper in the market?" I say no. I'm not getting into the market right now because, especially in any crypto markets, and especially since until we know how the government plays out in spring, I want to at least keep my options weighed. I want to be cash ready to be able to put into other assets. So that'll be hardware, whether it be hardware for mining cryptocurrencies or hardware for data mining or hardware for infrastructure for some of the robots we're working on. When I say robots, I'm talking about automated systems. Think of that like Zapier or what I show y'all with N8N or what I show you with what Windows is doing with Power Automate, right? We've got to look at it that way. So right now, we have the significant dip I told you was coming this week has begun. Um, and let's start looking at some of these charts. Here we go. So seasons of Bitcoin, right? Check this out. If we go on the 12-hour, if you look at the MACD, you start seeing that we're getting ready. It looks like we're getting ready to cross negative. That's a bearish sign. Let's go to the 4-hour. We've already crossed negative. Bearish sign. So all of these things are just bear signs. They're important because as you see these numbers in the 4-hour and the 12-hour charts to play out, when they hit on the day and those days curl down, that's your negative sentiment. Look where it's heading. As this goes down, as these ticks begin to tick, look where we're heading towards. So I just want to show you something because this is on the day. And I just put this down for the January dip, which may happen, which was similar to last season. Right here. Which color was that? Because that color is different. Hold on. My OCD is acting up. Ah, that one. Okay. Cool. Second one. Let me change this real fast. OCD. All right. So this red, you got a January dip, and then you also see it rolls throughout January. So I don't know if it's going to be first week of January. It don't matter because all of January can be bloody. And that's a significant drop before you saw a significant run up. But that was during a halvening cycle. We are now outside of the halvening cycle. So let me show you what it looks like when Bitcoin plays after a halvening cycle. We have this thing called crypto winter, right? So this was Bitcoin's 2017 spike up and then crash down. So that's right now we're going to where I feel we're going into this zone right here. Let me zoom in a little bit. Hold on so you can see. Come on. There we go. There we go. All right. So December, you have a dip in December, right? Which is what we're going through right now. After that dip, boom, here's your January dip. Crashes all the way down to the end to February. Spikes up for a little bit, February, but then comes right back down in March because there's a March dip. Then comes back up, but you know, the May, June dip. Tries to come back up, but you know, you got that September dip. And then it spikes up for a little bit, goes flat, and then November of 2018, back after that 2017 run, falls off the cliff in that November dip. That November dip is significant. We go down to a bottom. This trough is where I consider all of this to be crypto winter. All the way till March of the following season. So now let's fast forward. Right? We go into our charts. Hold on. There we go. All right. So we go up. We've gone. We go down. We have this January dip. January dip. So if we do, where does it fall? If we're already in this pocket zone right here, this is a purple line. So as you know, we do sentiment charting. If the link is in the description, sentiment charting analysis is basically how we draw our monthly lines, our weekly lines. Monthly lines are purple, weekly lines are in blue. And so this way, when you come to your days or your hourly charts, you're able to see where sentiment is. Major sentiment is on the month, semi-major sentiment's on a weekly. If you break a monthly line, you fall significantly. So once we broke this purple line, boom, we fall significantly. Boom, we fall significantly. So here we are. We have a significant line here. We have a dip that is in effect. And once this dip begins to finish playing out, we're going to hit this purple line, which is a monthly line. And you see, if this here, it bounces to the next monthly, you're looking at 41. Now, besides what Bitcoin just does in a halvening cycle, we also got to deal with the fact that the market could potentially take a tanker, and we've got interest rates that are going out of control. Now, I want to show y'all something that I've been starting to map, which is on the stock market side of things, because like I said to a friend of mine, hey friend, I was at the kitchen and we were talking about crypto, and he was asking me about, you know, about the whole, well, isn't Bitcoin going to go to 100,000? I was like, well, there's no money. And I've told y'all all of that. I was like, I would love for Bitcoin to have run all the way up, but there's no money. The macroeconomics are just as important as your microeconomics. So for me, I could want Bitcoin to go up, want it, but it doesn't matter if nobody has the disposable income, especially right around the holiday seasons where, you know, people might have been saving money to buy Christmas gifts or run up their credit cards, because we've been running up credit cards like nobody's business right now. That's what the numbers are showing us inside this economy. So the crazy shit is, if you look at what's going on the S&P index. Let me see if all my signals are on. I think they are. Let's go to the day we are. Let me hit refresh real fast. And are we on my S&P 500? Yes, we are. All right. So there it is. Let's zoom in. So All right. So what I want you to see right here on the 4-hour chart, everything is golden, right? You look at the 2-hour chart, we're starting to converge. You look at the 30-minute chart, we've converged into negative. You go to the 5-minute chart, it's floating. So right now, let's just deal with the 12-hour. So 12-hour, you're still on an upswing. Everything looks golden, right? So from this, you would think, hey, this might be a bull sentiment because, hey, I'm looking at this. I'm above the 200-day moving average. Seemingly, I'm moving up, though we don't have a lot of volume. We're pumping with no volume. I got a divergence on why am I pumping, but volume's going down, right? So that right there is kind of shaky for me. Then I look at the Russell. The Russell has a different set of index stocks. If I look at the Russell, let's go to the day. If I look at it, we just came out of a negative territory. We are spiking right now, but we just came out of a serious negative run. Now, if you go on the weekly's already crossed negative on the Russell. So that is negative sentiment. If you go on the monthly, we're converging again towards January. There is a convergence to the negative. When this and you can see though this is tipping down into the negative. When it flips, when the green flips, when it goes from dark green to the light green, it goes from light green to pink to red. That's negative sentiment. So it's already on monthly, but a monthly trend, we've got a negative convergence getting ready to flip on the Russell 2000. So where everybody else is real positive, why would I feel positive right now? We're at the end of the year cycle. There's still people going to be running out for profits. We've got a pump because we've got options expiring. We've got low volume and spiking assets. All things tying to itself to be no fun. Then let's look at Bitcoin, right? Now, as I warned you, Bitcoin took the tanker that we said it was going to take potentially this week, and it took it. Hold on, this is not loading my chart. Need to reload. I mean, really chart. There we go. There you go. All right. So now, if we go on the week, look, already crossing and gaining momentum. It's picking up weight to the downside. That's on the weekly. That's a weekly average. Let's go to the monthly. We've converging, right? So if we look at the 4, we're converging. We're diverging out. Look at the strength to the negative side happening on the 4-hour, on the 2-hour. Right? We got a strengthening. Once you cross into the negative MACD, no bueno. Yeah, we have some positive in the last 15 minutes, but again, it's about the length of time, right? It's about length of time. So on the 12-hour, we are getting ready to cross into the negative. We've crossed into the negative. There it is. On the 12-hour, it's only a matter of time before it ends up on the day. But on an average, it's already on the week. So you're seeing another wave of negative energy that's going to hit into these metrics by the end of this week, which pulls us deeper into negative territory right before January. So I'm seeing a sizable dip potentially hitting the market by January. That's just what I see. And so, what does that mean? Hide your wife, hide your kids? No. It means we've got to make plans, right? So, my plans have been as such. As I told you, I went ahead and I'm in the money on my shorts. I have a Bitcoin 3x short I got on Kucoin. And those shorts, I was sniping them. Hold on, let me pull up that chart. Where's my chart? Where's the chart? All right, there we go. And let me pull up my sniping chart. Load. And BTS. There we are. This have it? It doesn't seem like it. Hold on. Yeah, this is not the right one. Really? Really? Luckily, I keep everything bookmarked. There we go. All right, so let's go on the day. And let me hit, let me hit refresh so I can get my alerts up. Oh, wait, this is wrong. This is ETH short. I don't need ETH short. Hold on. Oh, yeah, I did snipe some ETH short. So actually, I did do that. So you can see here, I sniped down here and the price has gone up. I got this ETH short at around 0.008 cents and it's already gone up. And hold on, I'm looking for my BTC short. Wow. There we are. And as you see down here, I pulled some, I sniped a few positions. I'm not in the money on these two snipes that I did here, but I did snipe here, which I'm now in the money with, as you can see, because where we are. And I did snipe two down here, which we are now in the money. And as you see, we're getting ready to get on to the 200-day moving average, which, if you're in the short position, means bullish. So now I've got a bullish sign on my short position in Bitcoin, which does not bode well for Bitcoin on the bullish side. Now, the reason why I told y'all earlier in the spring, I was even thinking about this, was if I know Bitcoin was going to go down, if I know, hey, you know what, I chart this, I trend this, and every January Bitcoin dips significantly. It dips significantly twice a year, January and November. Now, if I know this, how would I play it? I'd play it with shorts. That's what I did. So these short positions will net profit as Bitcoin falls. This is my hedge on the information that I tell y'all. I put my money where my mouth is. If I'm telling you I think Bitcoin's going short, well, I put my money on it. And that's what these positions, these arrows you see here, is our live account actually buying these dips. So once we get above the $1.39 mark, we'll be in the money. Basically, it'll be profitable on all of these. And we'll be profitable from down here. Now, where can these go? It can do about 100%, about $2. That's my estimate on it. Now, there's potentiality for it to go to these other levels. It was a $3 mark because it had been in that zone. There is a another. Yeah, this is the 3-2. This is the 3. This is these. These are these purples are significant lines, right? As you know from sentiment charting, link in the description. So these I just plotted out to get what this move would look like to the upside. So I have all my upside. Basically, we've got a couple percentage points to the upside on this play. I'm not going to try to quote any numbers right now. I'm going to let it play out. And then this way, y'all will be able to see it in real time as we do it. But I'm not telling anybody exactly what we're doing just because we're researching it. This is still all theoretical, but we're not hedging a lot of cash flow on this position. So this is just our trade position for the spring, just to say, hey, we think Bitcoin's going down. We're hedging for it to go down. We've got Ethereum shorts and Bitcoin shorts. Why? It's not that we think Bitcoin is a short position long term. No, we just think that we may be falling into a winter cycle in crypto until the next halving cycle to 2024, or at least till November 2022 / March 2023, in which that should be the bottom of the bottom. If the narrative that Bitcoin still follows a halving cycle plays out, which has been what it's been since the halving cycle started, which was 20. Hold on. Load. Seasons of Bitcoin. Here we go. Because I have all my data in my chart. So give me 1 second. Here we go. No, don't do that. Don't move. Just there you go. So the first one was 2012. So there you go. So since 2012, when the first halving cycle started, we can see what the estimates were, what the peak was. I charted and thought if it followed its routine, it would get to about 132,000. We don't have enough cash. Everything is everything about the economy has been kicked in the face. With no new checks, it's kicked in the face. Now, let's deal with the Fed's moves, because the Fed has made some moves and those moves have consequences. So in the Discord, Musical Geniuses Discord, link in the description, I put some videos up. You can scroll back. If you go into the cash lane room, that's what we call the cash lane crew. If you go in here, I know it's a lot of information. I know I put a lot out, but I'm always researching. Like, my girl can tell you I'll be up at 3 o'clock in the morning reading a news article about something, or I'll be up at 4 in the morning, or 1 in the morning, or 5 in the morning, just studying this economy, because I haven't seen anything like this, and everything is leaning towards what we've seen as signals to very major market crashes. So because I'm serious about it so much that stocks have been liquidated just like the CEOs are doing. Like, I follow the moves of the people that are making their moves. They're making their moves and they're making them on purpose. Yeah, we can think we're smarter than the people that have all that money, but the last time the regular people thought they were smarter than the people that invested it in the stock market, that was called the Great Depression. I suggest people go to YouTube and start looking at what the Great Depression signified. It signified a transition from being able to be strapped in debt and able to spend on anything frivolously, to having to rein in their spending extremely tight and to watch miscellaneous spending on things like stocks, right? Because when you got to eat, and you've got, or you want to hold a stock, you're going to make a choice over that. When the price of the stock keeps going down, you'll make a choice to eat, and people are making hard choices right now. If you watch the videos we have, there's a crisis going on in China called Evergrande. Now, Evergrande situation is, well, people will say it's not like the Lehman Brothers situation of 2007, 2008. And for those of you that weren't around for that, it was a rough time, especially if you had a traditional bank and that traditional bank decided to cut you off from your funding. They made you have a significant amount of money in your bank accounts. Let's just say 500, and you had to maintain that amount of money in there for it to be viable for you to keep an account. If your account was on zero, they close the account. What's going to happen is, as these debt lines of credit begin to get exhausted because people are putting everything on their credit cards, things will begin to collapse on itself. Now, what triggered the 2007 2008 financial collapse was something called derivatives. Derivatives are magic money. Basically, you take a bunch of assets, wrap them into some new asset, give it some magical evaluation number, and it gets a score of AAA, and then that gets the highest rating that they can distribute as a bond on the market. Now, these markets are basically taking all these assets and they're betting on their solvency. If people begin to go underwater in their real estate, which means if they're paying their mortgage and the interest rate goes up, and now because interest rates go up, and that means everybody's interest rate goes up, doesn't matter if you're a good standing person or not. This is the first thing you need to understand. This does not matter about how good your credit's been. If you have any lines of credit, all lines of credit will see an increase in their interest rates because they've kept interest rates down to have people spending and getting more credit since credit is cheap. When they tighten it, that's how they rein in quote unquote inflation. If you print too much money, goods go up. Goods prices typically don't ever come down. So, that burger that used to be 5 cents back in the great grandparents' days, well, it ain't 5 cents no more. And a pizza that used to be 99 cents a few years ago is $1.25 now. I don't know where you're from. I haven't seen a dollar pizza in quite some time. You got to buy the whole pie. You can't just get a slice. And them pies have gone up. And next year, you're going to see it in the food prices, especially if you're seeing it in the options market and you're seeing things like wheat are going up. So back to Evergrande. Evergrande defaulted on their properties. These things, shares that have been purchased into this company, were probably tied into other weirdo crap. And potentially, we're looking at contagion as more and more real estate developers in China collapse. And why is that even important? I don't invest in China. That ain't my problem. Right. You didn't, but Charlie Munger did. Warren Buffett did. And anybody that follows Warren Buffett or Charlie Munger threw their weight into China because of China's growth prospects. But that growth was counterfeit. Just because you build a bunch of apartment buildings and you tell everybody you can't invest in the stock market, your only real net worth, or what we'll consider an asset, is real estate. So the most of the people in China, that's their way. You don't stick it in a bank, you buy real estate. So you're talking about people that have 2 to 3 pieces of property. You're talking about if you get married, you better have some land in your dowry type beats. So if you're not coming up with land, you ain't getting married. And now China want to do a 3-child law when they went down from that 1-child law. And they're trying to give loans for people to get married and have more kids. And that ain't flying over there. See, there's problems. There's problems. And you're doing this all the while you're cutting the funding to your civil servants, government workers. When you start cutting the paychecks of government workers, you got to be having a financial problem. Especially if you got to buy up all these crappy pieces of assets that aren't even done yet. Ponzi schemes are not just crypto or what people want to consider crypto. Ponzi schemes are the American economy, is the Federal Reserve economy. The money printer got burr, and now we're suffering for it. So what does that mean? It's time to pivot to entrepreneurship. And you're not getting it behind a paywall and a whole bunch of books. It's hard work. Real talk. It's hard work. It's hours of getting up and studying something you don't want to study and doing the real work. But if you're enjoying what you're doing and you have an enter strategy and an exit strategy, like don't just have hobbies, y'all. Have an enter strategy. How do you get into business? How do you get paid in the business? How do you cash that money to buy food? PayPal, Cash App, Coinbase, Gemini. Whomever is going to give you a debit card, get it. Because if the banks want to act sideways to you, you better have other options. There's nothing wrong with starting a LLC and signing up and getting a bank account with something like Bluevine, an online business bank. Some of those banks are earning 1%. Now, what does it mean when they raise interest rates? It means it's going to be better to take your money out and stick it someplace they can earn interest because the interest rates are getting back up. It's just the way that the economy flips where it wants you to hold money. When it does not want you to save money, it makes interest rates low. This makes people leverage to get more debt. That'd be real estate or even on the stock market. You can do things like take out margin calls. That margin is just loans. And now you take out these loans at low interest rates and you can hold them and try to make money on that. Now, when interest rates go up, that flips on that. People are going to come out of that, go into cash, and move that cash back into interest bearing accounts. See? What did we do? What is Elon doing? Elon's even buying up his own stocks or getting the options to buy them at lower prices. Now, can the market keep running up? Of course it can. But how safe do you feel that you're going to make money, the same amount of money you made this year, next year? How sure are you with the job that you have? How sure are you that all of your clients are okay? And that's the hard one. Like, especially as a business owner, especially as a digital business owner. Like, I do websites for folks. I do web design. I do graphic design, you know, and I pivoted away from all of that side of the business to focus on generating our own business that allows us to make money on our assets rather than on clientele. Not to say that we don't want clientele, it's just that we had to come up with a longer term strategy that said, hey, what is our intellectual property? How do we handle intellectual property? How do we handle that for our business? Is there a way to do this in this, as far as like the oncoming metaverse? Yeah, there's plenty of ways to do this. We've been here before. We've been in metaverses before. We were in Second Life. We know how to deal with a digital economy and a 3D world economy. That's why we've made the moves we've made. Because as the analog dries up, y'all, there's really only one other option, right? Enter strategy, exit strategy. How do I get my money? Well, I either commute to work to go to a computer. That makes no sense. What business is going to keep paying for that? And if they keep paying for stupid shit like that, then they deserve to be out of business. I've been telling CEOs for years, your biggest expense, and I've been an employee at Fortune 500 companies, and I can tell you right now, you've got thousands of people sitting in a big ass building that takes up electricity. You got to feed people, so you got to have like commerce in it, or some type of cafeteria or whatever. So that's food and food waste. You've got insurance. I'm at the beginning catching up. What's up, Current? Oh, it's nothing big. I mean, you'll catch up to the other stuff that's like Bitcoin right now. The only thing I'm doing now is I'm going forward as thinking about how we're dealing with 2022. So what you've missed, what you can catch up with, is me just talking about basically the market seems to be pivoting into the negative territory, which I told everybody was going to happen. I said this week is going to be significant. Watch for a dip this week. The dip is here. Be careful. January dip is coming. So there's a dip in January, a significant one. It's one of the big ones. November and January are significant dip points. And then you've got what I call the 3-piece and a biscuit, right? You catch a 2-piece, you get a 3-piece, right? Instead of two, this 3-piece is you've got the biscuit, which is December, and the 3-piece is January, February, and March, right? So you get a small dip and a pump up that kind of fakes you, which I can show right here. Hey, where are you? Here it is. Ow, ow. There you go. Let's get rid of this one. So we had our dip right here on the week. Let me zoom in. This is what we were looking at. 27th. Here's the dip I said was coming. Dip came. We've got a January dip right around the corner. And then there's going to be a March and then potentially a February and potentially a March dip. So I would just be careful getting into any serious investments right now. Just wait to see how it plays out. If you're already on top of things, I'd be looking for exits. Maybe. If you can lock in profits, why not take it? Don't think it's going to run up forever. All right. So now getting back. So Evergrande's a situation. We also have a lot of Harry Dents and everybody else ether in the economy, digital economy. What's going on? Oh, this is a post in China that talks about, it's a video that talks about the fact that they're on their social networks discussing the fact that they're getting pay cuts in the civil servants side of China's economy. That's huge. That shows that there's other issues. Uh, Money GPS got some definitely good information. Wall of worry. Oh, this is kind of big. 10 countries simulate a cyber attack on the financial global system. Now, this is in our Discord, link in the description below, to the Cash Lane Musical Geniuses room. But this is real, right? So the last time, and I put the post down here, the last time they did this was in 2019. There was a simulation test done across the world in which they did a scenario about a virus that got spread and traveled and circumnavigated the world. Right? And here we are again. So these great people, are now telling us that they're getting ready to have some type of cybernetic hack that's going to disrupt the financial system. And they're preparing for it. 10 countries are in on this. And we're at the cusp of having markets turn south as interest rates are potentially about to go up, and nobody sees this as real coinky dink. So that's why I'm saying there's way more sentiment to some negative financial situation next year. Be greedy when people are fearful, and be fearful when people are greedy. Right? People are greedy right now on the stock market, and I'm extremely fearful. Especially when they're telling you, hey, we have financial market situation and there's probably going to be a hack. This has nothing to do with crypto. This is just bank accounts they're talking about being hacked. So just be on the watch for this. We're watching our accounts, and we're also like leveraging into other things, like putting things into hard assets or mining assets. Just food for thought. Don't leave it all in the market. Here we go. Big bank runs in spring 2022. Another person talking about looking like MG. Another person talking about the fact that 2022 might not be nice in the spring. Here you can see some of my trades that I put out on the 23rd before Christmas. You know, talking about this Santa rally only had this one day, struggle beats, slow momentum. Then I talked about the fact that I said be careful the 27th, which is now this week, because this is on the week. You can see that right there on this week that this was the pump fake. Here it is playing out this week, just as we said. And then I told y'all what I was going to do, taking the sniper position, sniping my BTC points for my BTC shorts. Now, there's many problems in the economy, and you'll see I put videos out for those things that are going on, especially 600 billion worth of Chinese stocks getting ready to leave the market. That's going to have huge implications, y'all. I think it's DD or something like DIDI or something like that is off the market. More are coming off the market. And that money is going to get pulled out. Not to mention, there's defaulting Chinese stocks that are getting ready to default even further. That means people ain't getting paid. So there's a lot going on. Tether might be tied to Evergrande assets. I would be very careful of holding USDT. I hold USDC. It is 1-to-1 back to the US dollar. That doesn't mean much with the US dollar being printed to ridiculousness, but at least it's tied 1-to-1 to a federally printed thing. Tether is run, well, you watch this video if you want to find out who runs it. Like I said, I would be extremely cautious holding Tether. I would hold USDC. Serious Kid putting out how IRS is talking about stolen property, and that how ironic is that, right? I put out something talking about interest rate hikes and what it could potentially do to bank accounts next year. This is definitely a good watch on a video. This is showing some of the new things that's going on in the music industry, and why, as it is the industry currently, it's a wrap for it. Like what they've done to basically treat our property as loss leader material. What loss leader is when you go into a supermarket, and if you went back and if you used to go into a music store back in the day, or you go into a supermarket and you go to the aisle, and you to check out, and at the checkout aisle you see a piece of gum, right? The loss leader is when your music is on the shelf for 99 cents, or for when your music's on the shelf for like 9.99 or 7.99 for like Tuesday sales, or whenever the first release of an album came out, the certain record stores were losing money on that. So they could lose anywhere between 25 cents to even $1 per sale. Now, what they'd have to do is get these so music right there is just a loss leader. It's to bring you into the store to buy the new Beyonce album or get the new movie DVD or whatever. But what they would have to do is try to sell you a piece of gum or hope you buy something else in the store to make up for the fact that they lost money. So the music being, if you had a music store and most of your music was what you sold, then music was the leader of your loss in the building, or a loss leader. DVDs, look at the racks in Walmart. Look at how they're shrinking. Look at the video game racks. Look at how they're shrinking. Do you see more digital or analog? Analog means physical stuff, digital means digital, right? So I see less physical stuff unless it's clothes and food, but gaming and all that stuff is shrinking. Maybe you see hardware and maybe devices, but for the most part, shrinking. So let's think about radio. Let's really think about, no, let's think about excuse me, record labels, right? Because they're the ones that are raping our souls, right? So if you have a record label, what did they do for you? Right? Let's just look at that. They got you on the radio, so they got ears. When MTV came around, they got music videos out for you, so you got some eyeballs and ears, right? So people can hear your music and see you dancing to your music or throwing up whatever in your music video, wearing whatever. So it's about seeing and hearing you. Okay, radio. They got you on the radio airwaves, right? Airwaves. So, but to get a radio or to hear the radio, you either had a radio in your car, which for some people at a time that was not standard, or you had a radio in your house. You still had to buy a radio to hear yourself on the radio. Now, how do people consume now? They have a digital device. It's Apple, Spotify, Amazon, fill in the blank. Typically digital. If you're on Spotify and you can upload your music yourself, you get all that royalty rate to you. Then to only get somebody to hear you, you can shoot a music video yourself or create one online or pay for somebody to do one online, like a lyric video or whatever. And you can put it out yourself, right? And that means you can make your own damn money. Okay. So what does a label do for you? Maybe get you more people, maybe get you more exposure, maybe make you have to write a whole bunch of music that isn't even from you, for your people that really like you. Basically, you have to give up you. Don't sell your soul type beats, right? But you seem to have to sell your soul type beats. You have to give up something to get something, but their access point to eyes and ears. But you're winning on TikTok without them. You're winning on YouTube without them. If you're able to get royalties, what the hell does it matter? The reason why I'm getting back into music next year, I'm so sincere about that, is because the technology is making it easier. The technology allows me to get it mixed and mastered in a way that gives me a viable product, and I can have fun doing it. Now, the other things in my life have now given me more headspace. My investments, Toxic Hustle's business, some of the services we provide give us the viability for me to concentrate on that when I want or give it more time. Now, when this economy does a flip on our ass, people's disposable income is going to be real short. Businesses are going to get tight, but they will still be spending. So I'm going to tell y'all now, services, products that cater to helping businesses will get you through this shit. Or something at a very, 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 very low rate that you can get a whole bunch of people to like. So, newsletter, But you got to do a lot of work because a lot of people have newsletters and they're charging anywhere between $4 and $19 for their newsletter. Or they have a Patreon account and that Patreon pays them for people. Then they work. Like these people work. Like all the stuff that I put in the Discord, I could easily lock behind a paywall, and I don't, because I don't have time for that crap. That's not me. I'm not out on the street trying to be no Craig Grant. I'm not here to sell no classes. I don't have time for that. I'm running businesses. Like I really don't have time for that shit. I'm not trying to be nobody's Gary Vaynerchuk. I'm not here to give you no hype-nitis. Not everybody's gonna make it through this shit. Not everybody got a headspace for this game, man. This system is toxic. And all we do is show you how to hustle through it. That's what Toxic Hustle is. That's exactly why we call it what it is. We call it Toxic Hustle because the world is toxic and we just want to help you hustle through it. And nobody else is telling you this shit. Get on CD Baby if you're a musician. Put your shit up there. Yes, it costs a little more, but you get all of your royalties for all of the streaming services and new shit that comes out, and you don't pay no more money. Then that stuff gets paid to your bank account. You can put that into an investment fund and earn interest. There you go. You just became a label. Congratulations. Now we can move into other shit like distribution and getting that into like gaming and trying to figure out how you can make it on other types of assets, how you can get it into other types of assets. How do we get it into commercials? Well, that's easy. You can start putting your music on something like Audio Jungle. And if somebody picks it up and uses it, they buy a contract for it and they use it in one of their videos. Bong, bada boom. If that video ends up becoming a commercial, bong, da boom. You still got paid. And if they want to use it in a national syndication, they'll come back to buy another license. Bong, they get an extended one. Da boom. Or upload your instrumentals yourself, make your own playlist and start circulating that playlist with other artists and then just get exposure. That's why we're building Toxic Hustle as a website too. To start stacking the information of who's connected to whom, how we can build playlists. But just understand you can do all this crap yourself. Just hard work. But at least now, you earn your royalties. You can do what you will with your music. Robot workforce isn't coming, it's already here. In office buildings, trading stocks, bonds, funds, basically managing hedge funds. In the field, farms, mowing lawns. In the warehouse, making boxes in the warehouse, navigating content and packages in the warehouse, being a forklift, unloading trucks themselves driving from point to point, ships. Now we have eVTOLs or like basically those drone planes that are getting ready to start flying around. Everything is going to be automated soon. So where do we stand in this? Where is your product? Where is your subscription or service? Subscriptions also equal royalties, reoccurring income. So where's your product? Where's your reoccurring income? And where is your subscription base? Because royalties are sporadic. So you want reoccurring, just like rental. Subscriptions like digital rent. If you think of a domain or a website as a digital piece of property, then it just needs visibility, right? Traffic. Sound familiar? Search engine optimization. Well, search engines are dying, so really it's social media optimization. How many social media platforms are you on? Are you just pumping the same shit on every platform, or are you curating content in a certain way to talk a certain way on different platforms? This is what I learned working with some of the biggest social media influencers being behind the scenes in their marketing campaigns. And it ain't nothing. Most of them are lying. Real talk. Most of these social media influencers straight up lying. They don't have the cash they have. They're not doing all the things they say they do. And I'm talking about big. Like we're talking like we already know about the Ty Lopez. Like I was working with somebody that was at that level. It's in my resume. Y'all know who it is. I'm not talking about it on there. If you just look up J Tragic Jeffrey, you will see my CV. So just understand these people are all fake. And what you have to look at is that an economy based off this fake ish ain't working no more. SM Zeus ain't working for these folks no more. More Americans get $250 payments every 2 weeks for 2 years. But it's not going to be a lot of people. We're talking about a couple hundred people here, a couple hundred people there. They are snitzeling back all of that spending, and that means no new money go in stock market, means stock market go down because the CEOs, the businesses are not buying back their stock at the top. They're buying the options at a lower number, just like Elon did. Retired Fed chair was against money printing. He's retired, and he always voted no because he was worried about the situation he sees coming right now. What we see right now, the fact that if you buy a whole chicken or bought a whole chicken in the last year, especially you bought an organic one, you know the price has doubled in a year. That's not a 20% increase. Something as simple as a free range chicken is double the price of last year. We're in the food industry, so we also know our prices on industrialized food. Watching as another developer in China defaults. This is number 4 of a big real estate developer. I told y'all when the first one fell and I was doing my research, I said, y'all watch, there's more. And if more fall and they hold billions of dollars each, that's billions of dollars per developer crashing. And we're not talking like 10 billion, 15 billion. No, we're talking like 100 billion here, 300 billion there. Oh, my payment that I got to pay you is a couple bills, a couple stacks. So this is number 4 that's down. Also, um, this is what I told you about earlier. This is now a video of somebody else talking about what I just told you about from that article I showed back up here. At the fact that they are running a basic war games on the financial institution. 10 countries. Back here on the 22nd, when I told y'all in the Discord about those the 10 countries, led a 10-country simulation of a major cyber attack on the global financial system. The last time they did this, and I showed y'all here, they did it on a disease spreading across the world in 2019. And what happened in 2020? Okay, I'm just letting you know. And it was right around November that they ran the tests. And here we are in November, December, they're doing this simulation. So just understand that this video I'm showing you here is this guy talking about what I told you back on the 27th, on the 22nd, which was they ran a test on they ran a simulation or had this big scenario of a financial collapse or financial hack happening and what the ripple effects will be. So I now have to figure out how do we Toxic Hustle as a company deal with potentially a uh, financial liquidity problem. How do we handle a financial liquidity problem when they're telling you banks might be frozen, credit cards might be frozen? I don't think gold chips are going to help me at the store. So maybe I do need to handle and carry at least enough cash for food. Will they accept cash at the supermarket? We'll see. But maybe having some cash on hand might be a good idea. My girl's been telling me to do that for the last couple months. I might need to listen to her. I know she's going to get a kick out of that one. When JP Morgan tells you don't fear a 20% stock market crash, I would prepare for a 20% market crash minimum. So, yes, please prepare. If something happens in the market, are you financially liquid for a year? Do you have enough capital? If you don't, how are you going to pivot to earn? Do you have digital access? Do you have digital cards you have access to? Um, Credit card companies may be able to ride through this thing pretty well because of how much they net in like just supreme earnings. So I would say that as long as it's a Mastercard and whatever type of card, you would be able to hold on to that. Like I said, I don't know about gold and all that, if that's a better hedge. I've never been through a major financial collapse. Um, other on the other side of the 2008 collapse, in which it's just work. I worked online. I did MySpace layouts. I got paid to PayPal. I was able to eat. As long as I could swipe my card, that was all that mattered. Same thing here. I got cards at Coinbase, Gemini, FTC, wherever you can get a card. Get a card everywhere you can in crypto. USDC is probably going to be a viable option for you to have on there for swiping. And then booyah. Then you just transfer whatever cash flow. And even taking clients in cryptocurrencies if possible. Right? There's nothing saying that you can't do that. And it's tax different if you do that because it's taxed as cash. It's not taxed as a tradable thing. It's not capital gains if you're getting it as service work or if you're getting it paid to facilitate a product and or service and or subscription. So there's nothing wrong with taking that as a revenue stream. We're going to be working that into our website ourselves. We're just trying to figure out whether or not, because we have an opportunity to do it the traditional way, which is PayPal, or we can really go crazy with this and go Web3 and link it to like a MetaMask wallet, which is kind of interesting. But again, with MetaMask, we would want to have at least on a Polygon network. So it's us figuring out whether or not we can do that with Polygon through how we want to build our website and if that's a feasible thing to do now, or if we just go traditional and just stick with like all the like Square or something like that. So we're still trying to figure that out. Oh, this is a probability. This guy is talking that 2020 isn't actually um that 2021 may not actually be the actual crash. I mean 2022, excuse me. That he makes a case for it potentially being out another year. I'll put it out here just so that hey, I'm not all doom and gloom. That there is a narrative that hey, this bull run could last another X amount of time. I just don't feel comfortable with the risk. I would rather focus in spring 100% of our attention on earning income. Like, just get back into just earning mode and looking at earnings and how do we earn and how do we earn with our clients. So for those that you don't that for those of you that are just watching this doesn't mean earn from you watching this YouTube video. We work with we work with companies that need web development. We work with companies that need marketing. We work with companies that need design for their presentation to get venture capital money. So that's how we typically get our cash flow in. And then what we're doing is we're going to be working with other people that, if there's other graphic designers and other developers, well, these are projects and these projects are getting paid for by our clients. And then our clients are paying us to get work done. We can't get all the work done ourselves, so we also outsource. So that's when I say we, I'm talking about the people that, and it might be a person like yourself who's listening in the future that might be working with us, right? So that's just what we do. So when we look at the economy, we're looking at it and saying, hey, we want to work on just getting back to earning, looking at clientele, starting to build a relationship with that, starting to build relationship with the clients we already have to helping them. Like we have a catering company, so getting that more visibility and things of that nature. So if there's a case for it to run another year, great. I honestly can't see it. If we couldn't even get where we are with Bitcoin, Bitcoin is a significant bellwether for me. The fact that Bitcoin could not push to 100,000 tells me a lot about this economy. And Bitcoin always falls first because Bitcoin is still speculative. So people will who have are not in the money in Bitcoin or basically are not profitable, they bought it at the top, will get out. And people who are new to the tech, a lot of people came in this year, will probably get out. A good 50 to 60% of that might leave, or maybe 40 or 30%. That's still a lot of exodus back to cash. And then that cash will get used for bills. Or if we even look at the margin calls for what might be in January, that people were betting against or betting for Bitcoin being at 100 and they missed or being out of the money in it. So just be careful. Like I said, I don't believe that we're going to have another year on it, but I could be wrong. And you can see and do your own research based off of what this guy's talking about. I will be looking more into it and keeping an eye on it myself. Oh man, I didn't even put the link to the actual video. Well, so let's see, one more thing. Oh shit, let me do this real quick. Hold on, y'all. One moment, y'all. Hold on. Your channel. Get this copy link address. Nobody even told me. Nobody told me. And save. There we go. All right. Now let me look at something. Here we go. Now I went looking on Google and I began researching something. Margin debt, long term data. I wanted to know where we were on margin debt. So I want you to see something. And I went looking into, I found stock indicators. This is from December 24th, 2021. This is a research paper. And as you can see, in billions of dollars, how high the margin debt is. Margin, if you don't know, is basically loans in the stock market. So you get credit. It's credit, right? So it's credit in the stock market. It's called margin. So when you get margin called, or if you hear margin calls, it's basically somebody saying, hey, you have all this credit. Uh, We're calling this margin. Look, you better prove you have liquidity to pay all this. And if you don't, boom, they call your margin. They'll sell off the shares, and you'll lose money. Just like that. That's how fast it happens. So look at how high this is. Look at where it was during the 2008 2009 financial collapse. Look where it was during the 1999, right before the 2000 glitch. I just want you to see how high we are right now. That's nothing to mess with, right? Margin net, again, how high it's gone. It's not as high as it was back here, or percentage of the will. I don't know what the Wilshire 5000 is. So this high financial collapse, it drops below the line. We're up here on a downtrend, but they're not calling this a financial collapse yet. See, they can call it a collapse now. They can't call it a collapse yet. But I just want you to see. Look where this is. Look where this is. Look where this is. Look how this looks. Look how this looks. Look how this looks. Look where it fell. Okay. I'm just letting you see some things. These are the things I'm just keeping an eye on. And I think the last thing I'm going to look at. Do I have any significant? I haven't been looking at news because news hasn't been important really to me. Yeah, I don't have any real major news. So yeah, next year, again, with the way that this market is, I told you the weaknesses that I see. Our economic prospect is early spring. It could be extremely shaky. As I showed you, we look to be similarly in the pattern of a falling economy. The signs for where some of the market indicators are, like the Russell, has begun to signal negative, that we're crossing into negative territory. So please be careful with your finances. I don't want to see nobody wrecked out here. I mean, yes, if it goes up, yay. But the risk, how much is risk? And this is mostly not for anybody that only has a few dollars in the game and like you don't have money that to lose. I'm talking to friends that have put mortgages up. That have leveraged themselves to the gills. I'm talking to friends that that are on the edge of jumping off a cliff with their finances and throw it at this economy or the stock market now at the top. Like, even if it's not the top, I would wait to see a significant correction before I bought back in. If every financial person you know is getting out of the market, CEOs, it's not me. I'm not the one making this thing up. Hold on. It's called insider selling in the news. Not the negative form of insider selling. Insider trading rules. Executive stock sales hit records. If you use the right keywords, you find the information. Insider selling, yes, you have the negative side of it where somebody could negatively impact the market. But insider trading, hold on, that's actually a better word, trading, instead of insider selling. Insider trading. Oh, wow. I didn't even see SodaStream. Really? That's new. SEC going to insider trading. Indicted. Insider trading. No, I think I had the right word, which is insider selling, because Elon Musk showed up. And that's what they're doing. Insiders are people that hold shares inside the company. So they're inside the company selling their shares. Insider trading. CEOs and insiders sell a record 69 billion of their stock, and the year isn't over yet. This was just 4 weeks ago. So that's what I mean when I say I wouldn't be buying at these numbers right now, because who are they selling to? Right? That's the biggest question you got to ask. Who's buying it if they're selling it? We are. We're buying. Sterling Construction seeing the first insider selling in years. The stock has seen its first insider selling since 2018. People are selling their shares, y'all. United Therapeutics code. Insiders are selling. Investors should take notice. This is 23 hours ago. So be careful with your assets. Don't just throw it. Just please practice prudence. Think of your assets as soldiers being put into battle. Do not put them in battles that they lose. Don't put them in wars that you're not sure of. If you buy a stock, why did you buy the stock? What makes the stock reasonable? What price is it? What is their earnings? Like, I don't get that heavy and deep right now because I'm not in stocks. I'm buying new tech. And some of my stock picks for next year are based off said new tech called blockchain and blockchain mining. So just think about that. Think about how you want to move your assets and keep them safe. All right. So I'm going to go ahead and shut this down. But please make sure you smash the like button. Make sure you share this with family and friends that you think this may help, especially if you know they're in this market and you think they're going a little too ape in their investments. Let them see what's going on, and maybe they make a decision that can save their finances, or make them at least be more cautious as an investor. As always, for real, y'all be safe out on these streets, and I'm gonna holler at you